Good morning. It's Tuesday, June 11, 2024. It's just after 11 a.m. on the East Coast. This is Robert Sin at CEO Technician on X, Goldfinger on co.ca, and Goldfinger Capital on Substack and YouTube. As always, if you enjoy this video, if you see value in the content that I give away for free, please hit the like button and subscribe. You can subscribe on YouTube. You can subscribe on Substack. And you can follow me on X and co.ca. Just getting into it today, I feel like this is not as many tabs as I usually have, so maybe we'll go a little faster today. One of the big points I want to make in this video is I really believe that precious metals investors and junior mining investors as well are being given a real opportunity here in June. And that doesn't mean I think that everything is going to go up tomorrow, but I think that the next 2 to 3 weeks is a real tremendous opportunity. If you think back to like April, early May, gold was soaring almost every day. Some of the mining stocks had huge moves, and a lot of people were feeling like they missed out on it. They can't chase it. Well, now you're getting a bit of a reset, a little bit of a correction, pullback, leveling off, resetting of expectations. I think sentiment has really come in a lot on both metals and mining stocks. And I think this is a real opportunity. I mean, just think about a month ago, everybody was talking copper. Copper was all over the headlines. I don't see copper anywhere here this morning. Nobody's talking about copper now. So this is perfect. And that doesn't mean you should start talking about it. Let's keep our name out of the paper for another few weeks. I think this June is a sort of, it feels like summer doldrums right now. I mean, I looked on my news feed today. No news releases really from any companies I follow. Market movements are pretty muted. So this is fine. Just let it be boring for a little while longer. Okay, it's going to be a really nice trade setup here soon. So, longest yield curve inversion in history. Why do we care about the yield curve? Well, we care a little bit because it helps to understand bigger picture macro cycles. So normally, just looking back at this chart, which goes back to the 1940s, historically, when the yield curve went inverted, which meant that the short-term rates were above the long-term rates. So like this one is 2s and 10s. So the 2-year yield, I'm just going to make up a number. Let's say it's 5%. And the 10-year yield is 4.5%. So it's inverted. The 2-year is above the 10-year. Normally, the 10-year would be above, in a normal economic environment, normal monetary policy regime, we would have the 10-year at, let's say, 4.5, and the 2-year would be at 3% or something like that, right? But no, since I want to say late 2022, it's been inverted. We've been inverted for a very, very long time. And so normally the inversion happens when the economy is too strong, inflation's running too hot, the central bank tightens, they raise the short-term policy rate above the long-term rate, and the long-term rate starts to price in a slowing economy. So yields drop at the long end, but they're higher at the short end. Well, then a recession happens. Historically, look, here's 1960, recession happened, and the yield curve went back to steepening. 1970, recession happened, yield curve went back to steepening. Mid 70s, recession happened, yield curve went back to steepening, the Fed cut, right? And you can see, okay, so this is, I think there's 8 arrows on the chart. So 8 recessions followed inverted yield curves since the late 50s. And here we are, number 9, but the recession hasn't happened. The recession hasn't happened. So it almost feels like the Fed is holding the rate, the policy rate, above 5%, 5.5%, because they are waiting for the recession to hit so they can start cutting, or stronger signs that a recession is coming. But so far, it hasn't happened. It's not coming, right? So we're just kind of waiting for this recession to appear so the Fed can start cutting. I think the longer this goes on, the odds favor, well, it's coming at some point. We just don't know when. But this is a very long period of inversion. And, so many commentators, so many investment bank, analysts have been wrong about trying to time rate cuts all the way back to early 2023, maybe even late 2022, right? We've all just been wrong trying to time this. But maybe when everybody gives up, that's when it's going to happen. We're going to finally get the start of that rate cutting cycle. Who knows? I cannot predict the economy. Um, Look, this is. I said summer doldrums. This is what it feels like. I mean, like this morning, first 30 minutes of the trading session, the E-mini dips to 53.3450. I buy the dip. I'm not going to show you my trading account, but I bought 53.35 on the E-mini S&P, and we rebound, take profits. Day is over, right? I made my trade for the day. And that's just look at all these little dips. Like this is ridiculous market. You just buy the little dip off the open, you make money. Obviously, that can't last forever, but it does feel like it's getting pretty boring here. We got the Fed tomorrow, so I wouldn't expect anything exciting in the next 24 hours. But then we get CPI tomorrow morning. Fed, it's a June Fed meeting. Yeah, we're going to get dot plots. So the dot plots might move the market, but the Fed is not going to do anything tomorrow. They're not going to cut rates. Um, I think the whole thing might be a yawn. I think the CPI might come in line, and I think the dot plots are not going to show anything really new. I mean, that's just my take. I think it's all pretty boring. Um, so yeah, sorry, I don't really have any bold forecasts. I don't have anything to add. Um, yeah, so let's look at the stock market. So like the S&P, here's the SPY. We're at all-time highs. We're sitting here at the highs. Very little volatility. The VIX is 13. It was down to 12 a couple days ago. No volatility. The dollar has strengthened since the ECB cut interest rates last week. But look at the euro dollar weekly chart, right? This is just coiling in a range. So yeah, it dropped from 108 to 107.20, but who cares? Big picture, the support is 106, the resistance is 109 or 110. We're just in the range, right? And really everybody's waiting on the Fed. I mean, that's really at the end of the day, when is the Fed going to actually move, right? But look at the like internals, like Tesla breaking down this morning, Caterpillar breaking down the last few weeks, JP Morgan breaking down this morning. So you have all these important big cap, mega cap stocks in downtrends breaking down, but look at the S&P, right? And I'm not going to go into the whole market breadth thing, but just simply put, like if you can visualize it, there's like 10 stocks that are leading this market. The S&P is 500, right? 500 biggest stocks in America. 10 stocks are leading an index to 500, okay? This is where we're at today. And I'm not trying to make a bearish call here, because making a bearish call has been very difficult and often wrong. But this is like something I've never seen before, okay? Where you have such weak internals. You got so many important, and just like, look at transports, American Airlines. I mean, look at this. This is American Airlines. This is the US air carrier. Look at this chart. It's bloody murder. This is like a murder scene. So this is a bull market, guys. It's just, yeah, it's a bull market. We're at all-time highs. Just buy Nvidia and Microsoft. Okay, if you say so. And then meanwhile, we've got this roaring kitty stuff, right? I'm not going to get into this whole thing, but this guy, so he puts on a really well-timed trade, evidently, at the beginning of May, and then starts posting for the first time in 3 years. And look at the chart. Like, look at what he does to the chart of this $10 billion market cap company. It's insanity. He's just posting memes, and like he had a webinar, whatever. He went live last week on YouTube. And look, he's a sharp guy. I'm not saying he's not sharp. I mean, he knows his stuff. Okay, he's a former CFA, but there's nothing that he said about the fundamentals of GameStop that were a surprise to anybody, I don't think. And basically, his thesis was betting on Ryan Cohen to turn the company around. Like, okay, one guy, yeah, maybe he's a good manager. He can get stuff done. He's a promoter, but you're gonna put $250 million on one guy? I don't know. The whole thing is just bizarre. It's bizarre in a world of very bizarre things going on right now. I don't have a take on GameStop. Didn't trade it, neither long nor short. No opinion. But the fact that there is still so much speculative enthusiasm out there that people are willing to follow this guy posting in his basement, showing his E-Trade account with YOLO call option position. It's bizarre. It's just the whole market is just very bizarre. Like, there's that saying, it's different this time, right? And whenever people say it's different this time, it's not. Well, I got news for you. It is different this time. This shit is weird. And we've never seen a market environment like the one we have now. So it is different this time. Uh, that's not a bullish or bearish call. It's just this shit is weird. Um, Okay, enough of that. I don't have anything to add on GameStop. So gold and silver, this is probably what most of you tune into me for, is the gold and silver commentary. So my Substack again. Oh, this is the one that I published yesterday. This is premium. If you want to really be bored out of your mind for 75 minutes, subscribe and watch that video. But here's a free one. China pauses gold purchases in May. So this happened on Friday. And this was supposedly, I guess, the reason why gold got punched in the mouth 3 times and dropped $90 on Friday. Now, so what really happened here? Well, China had been buying gold, accumulating for 18 months. And when we say China, the central bank, I think there's some nuance here. Okay, I'm going to throw in some nuance here. I don't profess to have a real good understanding of China at all. In fact, quite the opposite. But my take is there is concern among the Chinese people earlier this year, whatever, January, March, April, about the housing market, the banking system in China. And I feel like there was some run on the banks in China in April. And a lot of that money may have gone into gold. They saw their central bank accumulating gold for the last 18 months, so the people wanted gold too. So I think the Chinese government saw that in April and said, we need to halt purchases in May. We need to get this under control and try to reinstill confidence that people don't need to rush out and buy gold or Bitcoin, right? That's my take on what happened here. Also, just look at the price move that the Chinese buying in March and April caused, right? So China generally is a price sensitive buyer of metals and commodities. So when the price has had such a big move from 2000 to 2400, I think it's only natural for them to pull back and say, no, we're going to let it pull back and come to us. So yeah, I mean, look, that's clearly a sign that 2400 is a resistance level that, China is not just willing to bid it above 2400. So that's market signal there. But does this mean that gold is going to crash? No, I don't think so. In fact, I think that um, China will be a buyer again in the future, maybe later this month, maybe next month, maybe in August. But maybe they'll step in at 2250, 2200. I don't know. But they were certainly buying it at 21 and 2200 in March and April. So I wouldn't be surprised if they came back in and stepped in again. Okay, we'll have to see. But clearly that took a lot of the spring out of gold's stride there. You can see. So they actually pulled back in April as well. Okay, so I think They are price sensitive. They bought a lot in February between 2000 and 2100. They continued buying it well into the 21 and 2200 range in March, but then they seemed to pull back in April and obviously in May, right? Meanwhile, the Chinese people bought a lot. Um, so look, that's not bullish gold at all, but I don't think it's necessarily that bearish. All right. Silver. So number one, June is historically the worst month of the year for silver. So looking back 25, 30 years, June sucks for silver. So we're in June. So we got to get through this month. If silver can hold up and roughly tread water during a seasonally weak period of the year, that would be very positive, right? And I tweeted this yesterday, this weekly chart, this big picture pattern. Look, 28.50, $29, that's the big support range. That's the big support zone that silver needs to hold. Look, yeah, if we break back through 28, that's not going to look good. But if silver can hold up here throughout the rest of June, I would say that's very positive for further upside later in the summer. And that's what I'm watching. There's nothing about this chart, the weekly chart or the daily chart. Look at the uptrend. There's nothing that's bearish here. There's nothing that's bearish here. This is just a market that was very hot in May, very hot, cooling off. And just like I said at the start of the video, let it cool off for a couple more weeks. Just let it sit. Just let it chill. Okay. That's the most bullish thing that could possibly happen in my estimation for gold and silver. So gold miners, very similar commentary there, but I'll just say it's fundamentally 2330 gold and 2950 silver are a windfall for most mining companies. I mean, like any mining company that's worth its salt is making money hand over fist at these price levels. Okay. The GDX still is in a bigger picture uptrend. We've had a correction with the pullback in metals over the last few weeks. I said in last week's video, I'll say it again, 33 is my big support level in GDX. We're basically there, maybe a little bit of downside, maybe another 2% left. I'm not long. I don't have a trade on in GDX now. I'm letting it come to me. I think we're almost there. IAG, we talked about this last week. This is now at the buy level. I think 360 is the buy level. So yeah, time to get long. IM Gold, IAG. And notice how Newmont, the world's biggest gold producer, was the most hated stock in the world at the end of February, the most hated gold miner as well. And now it is displaying relative strength. So could it be that the Newcrest acquisition and company combination is actually working, benefiting them? And might we be in for a period of upside surprises from Newmont? I don't know. But look at the price action. Still above 40, despite the fact that gold got hammered, got crushed on Friday. Newmont held $40 support. And if we're really in a precious metals bull market, this is what you want to see from the leader, from the biggest company. You want to see it basing out at higher and higher levels, So this is bullish in my estimation. Okay. I am unmoved, right? It doesn't mean that everything's going up in the next few days, but as a bigger picture technician and a longer term investor, these charts look great. Okay. Stick with the precious metals bull, guys, and don't let FUD take you off the trade. Yeah, NexGen. Okay. So this is actionable now. Remember I talked about NexGen last month. I even put out a Substack post about the, uranium acquisition, the spot uranium purchase that they made, the very controversial one. I mean, basically called the top on this thing there in early May. The timing was almost impeccable. But here we are now. It's corrected pretty good. We're getting past 20%, getting closer to 30% drawdown here, and I am starting to lick my chops. This is setting up for a buy here. I drew the blue line, that's 650 on the NYSE, NXE on the NYSE. That is the big support level. I think you could buy it right here. If you want to roll the dice and see if you can get a little cheaper, you can wait a couple days and see if it comes all the way down to that blue line. But I'm going to put a buy on NexGen for a trade here, 677 on the NYSE. And because it's a uranium volatile sector, you got to give this at least 10% room. Okay, so if I put this trade on, my stop loss is going to be 10% under my entry price, just because you got to give it some room. You cannot use a 2 or 3% stop on a stock like this. You can just see the volatility in the chart, right? But I think the sentiment on this has gotten pretty negative. The price is quite a bit cheaper than it was a month ago. It doesn't mean it can't get even cheaper. It doesn't mean that at all. But I think the odds are, generally when NexGen gets hit like this and people start to get really negative on it, it has just paid to suck it up and just buy the damn thing. It's worked way more often on the long side than it has broken down on the short side. Okay, you can just look at the history of the stock. That's an uptrend. All right, it goes through these consolidation basing periods like it did in 2022, it did in early 2023, but it has always paid to stick with the bull here. And I don't think you get off that train here. And again, I'm just talking about this from a trading standpoint. I'm not talking about marrying it and marrying the management team and their lavish spending. But anyway, yeah, it's a good trade. Final topic, junior mining review. Okay, so Endurance Gold, American Eagle Gold, and Core Assets. So assume I own all three. Endurance Gold is a sponsor of Goldfinger Capital. Yeah, by the way, check out my YouTube channel. There's a lot of good content here, not just for me. In fact, most of it is, well, I guess it is all for me because I'm doing the interviews, but a lot of it is other people speaking, CEOs in the sector, Sean Kunkun, Blaine Monaghan of Pacific Ridge, PEX on the venture, and Ridgeline CEO, Chad Peters, RDG on the venture, VRR Resource, Hercules Silver, Warren Pratt. There's a lot of good content here. And Chris Taylor from Kodiak Copper. I mean, may I say, I've got a pretty good lineup here. I mean, if this is your shtick, if you like junior mining, if you like exploration, if you like making money from metals, boom, this is the place to be, guys. Anyway, just having a little fun there. So, Endurance Gold. Yeah, I consider me biased, of course. Look, I'm just going to get to the salient points. We could talk about endurance for over an hour like I did with Hercules. But look, the company obviously got hammered at the beginning of the year. I mean, this was a ridiculous washout back here in March. The share price has risen since then. They just closed the financing. So look at the working capital from the latest corporate presentation, 6.29 million. That's not all cash. It includes some securities that they hold, but they're well over 4 million in cash because they just closed the financing. So they're funded for 10,000 meter drill program at the Reliance project in the Braylorn region of BC. So they're fully funded for that. By the way, the financing was priced at 20 cents. Well, here it is at 18 cents. So that's a 10% discount from the people that participated in the financing. And you can see, look at the insider ownership here. I mean, this is an unusual share structure for a junior. And the fact that they could close a financing at a premium to market so quickly for such a large, for 4 million from an existing shareholder is unusual in itself. So um, I would say that's a sign of strength. Okay. Uh, Look, this is a 32 slide presentation. I'm not going to go into the whole thing, but the salient points are this is a high grade gold project where they've had a lot of success. Look at the drill intercepts along this trend: 15.7 grams over 24.8 meters, 5.89 grams over 31.5 meters. You know, there's a lot of gold here. All right. They talk a lot about their hit rate. 40 out of 84 holes returned over 10 gram meters. And then some of the highlights from the last couple of years of drilling. But here's the point that I really want to make. Where's the slide? So this is basically the model where you have um, fault fill veins coming up from deep, and these are the gold bearing structures, right? And this is like what they've been drilling down here. There's a lot of theories that these structures can widen at depth, and there um, we've seen some evidence of that at Imperial over here, including um, some of the holes that they reported in the last year. Okay, there's evidence that this Imperial zone is widening at depth, but really the upside, the juice is at Eagle, where this whole area at depth is untested. So, you know, this requires drilling some deeper angled holes. You know, you're talking 400 meters, maybe even going down to 500 meters to see if this theory is correct, to see if these gold bearing structures near surface that they've drilled out so extensively extend and widen at depth. And that's really where the juice could be here, right? But couple of things, and look at the rock. I mean, this is beautiful. This coxcomb quartz rock. This is beautiful stuff. And there's your VG. Um, where is it? Okay. So here's Eagle and here's Imperial. So these have been the two areas of focus of drilling in 2021, 2022, and 2023. Well, they call this top part of Eagle Crown. Well, this is an untested area between the two. And so this is very important for them to drill in this area in 2024, and that is one of their priorities. And also they're going to be testing some areas to the northwest of Imperial up here. Okay. And so basically just extending this whole trend. You can see the scale bar. So what is it, 1,500 to 2,000 meters, just really showing or proving that this is well endowed with gold throughout. And there, so you can see just the arrows. So these are the areas of focus for 2024. To the northwest of Imperial, testing Imperial and Diplomat to depth, filling in the untested zone between Imperial and Eagle, and then testing Eagle at depth and also extending it to the southeast. So boom, those are this diagram is beautiful because it shows you everything that they're going to be doing with the 10,000 meters of drilling in 2024. Okay, and Robert Boyd, the CEO. I recommend if you're interested, give him reach out to him on email, set up a call. He's great. He's really top notch, extremely a seasoned and experienced gold mining executive. So yeah, so that's my pitch for Endurance. Again, they're a sponsor of Goldfinger Capital and help make these videos free and free for you. Core assets. So this one, check out my Substack. I blogged about this one last week. I also saw Bob Moriarty of 321 Gold wrote something about core assets, but this one, and they were on my panel at Metals Investor Forum. So the CEO, Nick Rodway, he presented, and we did an interview you can find on YouTube at the Metals Investor Forum in Vancouver in early May. And this one, they announced June 5th, so this was a week ago, that they are getting ready to start drilling at Silverlime. And I cannot do this news release justice in a video, but he does it justice in a video, 10 minutes on YouTube. So if you're interested in core assets and this news release and why I like it, then watch that video. But this this target here at Sulphide City, this is highly intriguing to me, as are this whole target area that they have, this porphyry target area. Um, I love this target. I love this setup here. Okay, I think they're onto something, and I could be wrong, but they're going to test it this year. 5,000 meter diamond drill program getting underway right now in BC. So that's one that I really like. And then American Eagle Gold. So another one that I own has been a big winner for me. Those who watch these videos know I really like AE. And this was a news release yesterday morning, so June 10th, Monday, June 10th. Just an update on the drill program. I mean, they just started drilling 2 weeks ago, and they're already giving us an update. That's that's pretty cool. That doesn't happen all the time. But here's some key salient points. Early reports indicate that operations are proceeding smoothly and that drilling has encountered chalcopyrite, bornite, and molybdenite consistent with nearby holes previously drilled. So molybdenum and copper. We like chalcopyrite and bornite because when the more chalcopyrite and bornite we get in the drill core, the higher the copper grades are going to be. So they're drilling the first hole of the program, 2418, and they're already 750 meters into it, and they're still going. And then the new rig, the second one they're adding, is going to drill hole 2419, test an area of near surface gold rich area at the south zone, and then they're going to bend it over to the southeast to test the southern margin. So let's look at the map here. So here's 2418 and here's 2419. So I really like the placement of this whole 2419 because they're gonna gradually work their way to the southeast, but they don't want to just like do what they did last year, which is drilled this wild, I don't know what it was, this 800-meter step out in the middle of nowhere. They want to work their way over to the southeast and get more information from each drill hole, right? And then 2420, they're showing us the drill tray. So this is going to be to begin to connect the south zone and the north zone. So the placement of the first three holes, I mean, this is perfect placement in my idea. Attacking some key areas of focus for 2024 and doing it in a logical order. Okay. So they also said that they're receiving the final IP data, the merged, inversion modeling of the latest IP data, and that's going to be interesting to see as well. So maybe we'll get that later this month. So that's it. I think we hit it all. Yeah. Thanks for watching, guys. Hope you have a powerful trading week. And until next time.